Forging links.
Forging links.
Forging links, one person at a time.
Kirsten, how are you doing? Good to see you again.
Yeah, good. I just thought that we'd introduce this little Robert Kiyosaki video. Give us a little intro on who this guy is.
Yeah, Robert Kiyosaki, the story behind it is he created, or he authored a book called Rich Dad, Poor Dad. And what he was basically trying to tell people in the world of finance and money and kind of how the whole thing works was that we're not taught it. We don't get educated in finance at school. We arguably don't get it from our parents because they never got it from anywhere neither. So people largely, and it is considered 97% of the world's population, really don't understand anything about finance, certainly not investments, and certainly not how to generate income, other than the system that we've all been sort of sold into, which is, you know, you work 40 hours a week for 40 years to get 40% of your income. Well, that model doesn't work, it's broke, and there has to be a better way. So basically, Robert looked at that, and he had a friend, a school friend that he grew up with, and his father was an entrepreneur and very much into investment. And yeah, his dad was a college professor, very, very well educated, but totally and utterly broke.
And that comes back to what's in the beginning of the presentation, that 95% of people retire broke. That's not just saying people that don't get an education or people that don't work hard. That's 95% of the population. That is people that study. That is people that work hard their whole life.
Absolutely, and I'm a product of that. I'm not a 40-40-40. I'm a 36. I'm a 40-36 for 40%. In fact, I actually at Christmas lost my job employment, so I wasn't in that 97%. I was actually broke. I was literally having conversations regarding bankruptcy. Yeah. So what this video that we're going to introduce to our listeners, which is basically Robert Kiyosaki tells people that there are four areas of the financial world. One is that you're employed. The second one is that you have a go, you become self-employed, which carries even more risk than being employed, because at least if you're employed, you know you got a job. But again, most businesses fail in the first 1 to 2 years, and I'm a product of that. Tried several business, all failed because, like I've mentioned, if people don't share your dream, your vision, your goals, then it's very difficult to get people to support you. And maybe your family might support you initially, but trying to get other people to believe in your product or your service, whatever it is you have to offer. So that model doesn't really work either. I know lots and lots of people who have tried business but failed. The other one is to have a business where you employ people that is more substantial, more successful. And then what you're doing then is, as a business owner, you're stealing the dreams of those people who are employed for you, because they're building your dream and you have a good chance of success. Yeah. But the one that he really hits home on, and the one that we really want people to understand, is the fourth one, which is understanding how money works, understanding what currency is, understanding that once you understand the principle that the rich get richer and the poor get poorer, for one simple fact, that the rich know what to do with their money. They know how to get money to work for them rather than you work for money. And that's the difference. And that's all he does. That's all he does. It's an incredible book. I would suggest people get it. But the principle is, and particularly with us as we're discussing this hyperfund journey, the hyperfund journey really covers the fourth one. So it doesn't matter how uneducated you are, doesn't matter where you are in relation to finances. What the opportunity is to, one, for a 300 USDT membership in Hyperfund, you get a first class universal education. So don't believe a word that we say. I'm just telling you how it is. Yeah. But what Robert Kiyosaki recognizes, that if you don't get the education, if you don't understand it, you are going to be that statistic of
95%. Yeah.
Yeah. That you retire broke, because you'll never understand what this financial world is all about. Yep. So it's only a short presentation. We recommend it to you to watch. Yep. I also recommend the book, but yeah.
Watch this, guys.
August 15th, 1971 was when Nixon took the dollar off the gold standard. And that's why our economy is in this very precarious position today. And we have never been here in the history of the world. I mean, we printed more money in 10 years than we have in the last 10,000 years. It's just crazy. So what happened on August 15th, 1971, the 50th anniversary is coming up, is what kind of inspired me to question things. As I was saying to you when I first talked to you, I'm impressed with your generation, because you guys are far more aware of what's going on, at least financially, macroeconomically, than any other generation in history. But my generation, the boomer generation, we were clueless. So when August 15th, 1971 came, what people don't realize was right after that, we broke the agreement of the Bretton Woods Agreement in 1944. We promised the world the dollar would be backed by gold. Going back in time to 1933, it was FDR, Franklin Delano Roosevelt, who everybody loves. The guy was a hardcore Marxist. He made owning gold illegal. Mm. And so 1933, 1944, you got to study history, Bretton Woods, 71, Nixon screws the world. But this is the thing that happened, Jay, that really screwed my generation of boomers. The 401k was born in 1974. So today you have my generation, the boomers, they're hanging on by a thread due to historical events coming in. So now the stock market is at an all-time high. It's nuts. And the reason it's all-time high is because our CEOs are borrowing money from the Treasury to repurchase their own stocks. So we don't have a real economy. We don't have a real stock market. And the US, the Fed is greatly in debt. The US is greatly in debt. So your generation is far more aware. But my generation, my concern is the market is going to come down. Stock market, bond market, real estate market. And my generation is not prepared for it, because they're not as turned on or aware as much of your generation is. It's such a paradox of what's going on. Yeah, but you can see it if you're aware. And so that's why I commend you and your generation for being more aware than my generation. So the thing that happened in 74 was very, very important. Back in 1950s, when I was a real little kid, I was working with my rich dad, who was my best friend's father. Yeah. He had executives at his company that played the stock market. So this is the 50s and the 60s. And my rich dad said, anybody who's in the stock market's a gambler. And so I don't do business with gamblers. And I still remember that. So when I talk, a lot of my friends are not in the stock market. So this is the point. Back in the 50s and the 60s, prior to 71, when they took the dollar off the gold standard, you could save dollars because they weren't printing it. It was backed by gold. You see, 1944 to 71, you have to look at history. So it was really smart to be a saver of dollars. It was also smart. My rich dad didn't really save money. He built projects. He built big projects. But he bought bonds. So the smart money back in the 50s and the 60s was in bonds and savings because they didn't print money. If you can get your head around that one. And so today we're printing 120 billion a month in the US. I mean, this is insanity. So my message is, so 1974, they sent my generation into the 401k, Canada's RRSP, Australia's a superannuation, Japan's a 401k. So you have a whole generation, the old guys like me, who are hoping and praying that stock market stays up. Yeah. And because they print money, and money was so cheap, the CEOs were borrowing the money to buy their stocks. The bull goes up the stairs, the bear comes out the window. It's a very important investment strategy. What happens in a bull market is that at the top, people are happy. Please remember that, Jay. I mean, I can't even get reservations to eat. Places are packed. Biden's sending out checks. People are getting checks for having kids, for having puppies, they give you checks. And so everybody's euphoric. So here we are at the top of a bull market. But when the bear goes out the window, it comes down so fast. Like I think it was Ernest Hemingway who said, how did you go bankrupt? Slowly at first, then suddenly.
Yeah.
The suddenly is coming. So my message to the Cambridge House Group and all this right now is start shifting your attitude to depression. How are you going to get rich when everybody's depressed? I want you to think about that, because Jim's Records, is a good friend of mine.
Yeah.
The Great New Depression. We're going to a depression. And my generation had never been through a depression. My family was. So we're heading into the next Great Depression. So it sounds pessimistic, but the bull goes up the stairs. Everybody's happy. Champagne's flowing. I can't get a reservation. But when that bear comes down, a depression is emotional. People are depressed. So I don't mean to be a pessimist, but I'm saying get prepared to how you're going to make money when people are depressed. That's when you get rich. You make more money in a crash than you do in a boom. Be prepared for people being depressed. And then you'll see a different market emerging. I'm still investing. I'm doing all that. I don't stop.
Right.
But I'm not, I bought a lot of real estate also just last couple of months ago, another $160 million worth of real estate. But the reason we're doing that is because we know U.S. is becoming a nation of renters. And there's so many houses that are going into a foreclosure right now that the migration will become out of homeowners into apartment renters. So we're preparing for the depression. If that makes sense to you, I'm not saying I'm depressed. I'm just saying to your age group, be prepared for an economy where people are depressed, and you'll see a different economy. And your generation is aware, but they're gambling right now. Do you know what I mean? You have a generation of gamblers because they're in the stock market. So let me say it again. My rich dad, when I was a kid, he says only gamblers are in the stock market. But what happened in 74, they pushed my generation into the stock market. So all across the world, Jay, right now, is you have old guys like me who are happy because the stock market is high. And if I'm correct, the bear is about to take a leap out the window. Slowly at first, suddenly.
Forging links.
Forging links.
Forging links, one person at a time.